Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. Nasdaq, Dorsey, Wright, helping you stay one step ahead.
Hello, everyone, and welcome to the Nasdaq Dorsey Wright webinar for the week after Memorial Day. We're currently recording on May 27th. We got Ian Saunders here, Trevor Plesko. Trevor, how's it going?
Doing well. Yeah, enjoyed my nice Memorial Day weekend and hope you did as well.
Yeah. Was it good? You were saying earlier you traveled not too far, but a little bit out of town for the weekend?
Yeah, for those who don't know, most of the analysts here are in the office in Richmond, Virginia. Traveled down to Charlottesville, saw some family, and helped my mom move.
There you go. Nice rainy weekend here.
Oh yeah, lovely stuff.
It was rough. Yeah. I mean, at least it wasn't sunny the first day we came back. And then we got to at least come back to the office a couple of days before it gets sunny. Maybe we'll get sunny this weekend.
Let's hope.
Yeah. Unfortunately, no time this weekend really for a lot of like barbecue action. I think Memorial Day is usually known for first day the pool opens typically for the summer. People want to grill hot dogs, hamburgers, and everything out there. But at least I didn't do a ton of that this year.
Yeah.
I ordered pizza. That was it.
Not a lot of that going on this weekend.
Not a lot at all. One of the fun things that we do, we'll take a look at some market stuff. There's certainly been a lot of stuff going on in the market over the course of the past week. But I don't think we hit on it last week. One of the fun things that we do every year is we look at the backyard bullish percent indicator. So for those who don't know, bullish percents are a way to gauge market sentiment, right? So maybe we'll talk about some today, but they're a way to look at the market, look at a basket of stocks and say, okay, how many stocks are participating in that upside action? They can be used historically as maybe kind of a indication of risk, right? If things are super washed out, then the bullish percent will be low. If things are really frothy, maybe they'll be a little bit higher, right? So different ways to think about things, but there's a pretty fun piece that we put in the report every year, but Jamie put it in the report.
Yeah, one of my favorites, the backyard bullish percents.
Thursday, I think it was, right? Let's dive into that here. Backyard bullish percent indicator. I'll just show it here. So we didn't necessarily have any time to do this, but maybe for those that did, or you want to keep in mind for the July 4th holiday, just a fun thing to look at when you're, let's say, starting off with your best friend and neighbor has a backyard barbecue, which you're not invited. As an advisor, if you're not invited to the barbecue, assume that means not doing too well. Probably means the market's at a bottom, right? Not the case this year. Maybe on the other end, your best friend invites you to a backyard barbecue in your honor, right? Maybe that means the market reached the top. So we try to put a lot of hard-hitting commentary in here. There's some fun stuff in there too.
Absolutely. Definitely worth a read. One of the funnest ones we put out every year.
Yeah. When we're looking at other stuff, Trevor, what kind of things have you been taking a look at over the course of the past week or so, or how has broader market action done? I was out of town, so.
I mean, things have done pretty well. I mean, continue to see a lot of themes that we've talked about recently. I mean, domestic equities continue to just be on an absolute tear here, especially within some of those technology areas. And we'll touch on that here in just a bit. But I mean, just looking at the S&P 500, I mean, putting together a solid week over the last week or so, about 1.2% as of Wednesday's close, equal weight at a little bit better of about 1.8%. But notably over the last 8 weeks, we've had 8 consecutive positive weeks. If we close higher at the end of Friday, should be the 9th consecutive positive week. So really pretty rare territory. And just kind of highlights or underscores just how consistent the upside we've seen recently has been.
Yeah, I mean, we've seen a lot of different headlines flying around about things that might be looking bad, looking better. I mean, there's different ceasefires, not ceasefires. Is the Strait of Hormuz open? Is it closed? I feel like that changes every day almost at this point. Well, it changes a lot more when the markets are closed. I've noticed over the weekends than it does when the markets are open. But we won't dive into that commentary for now. But when we're looking at movement, I mean, there's really 2 areas that have been driving a lot of the movement in the market over the course of the past few weeks, right? You wrote a good piece in the report. All your pieces are good, but this one especially, in the report last week, right? Looking at technology and energy as those kind of two main areas. Is that right?
Yeah, absolutely. I mean, those have been kind of the 2 areas leading the way to the upside this year. At least at the time I wrote it, if you look at some of those select sector spider funds for those sectors, XLK and XLE specifically, both of them up 20% or more year to date. I think XLK at the time was up 23%, now closer to 30%. Whereas really the next closest sector was only up like 10% or so. And I think still, broadly speaking, holds up relatively true. You see industrials, materials up about 12%, energy and technology each up about 28% year to date. So most of the upside, or most of the stocks leading the way to the upside, have been from energy, technology, and really you've seen that reflected in a lot of our relative strength metrics. Specifically, I think the one we're most well known for in terms of sector strength is Dolly, and within there we have different rankings of those 11 major sectors, and currently energy has held the top spot there for a few months, and then with technology kind of picking up steam here, moved back up into second, now within striking distance, actually moving ahead of energy. I think it's only about 5 signals away with recent action, so could see that potentially move to first. But I think the really notable thing has been just the total number of signals that they have in there. Each of them have over 225 signals, and it's pretty rare to see that for any one sector, let alone two. I think there was only one instance in which you've seen only 2 sectors have such kind of concentrated levels of strength. But historically, it's been a pretty good sign that that sector is going to kind of continue moving forward. So just kind of looking at kind of the forward returns of those two, I think energy is a weird one where typically if you see that kind of gain a significant amount of leadership, it typically happens in kind of weird environments where either everything else but oil is falling, or you just see a pretty significant amount of strength within crude. And so recently, I mean, haven't necessarily seen weakness within equities, but with crude shooting up so much, you've seen that definitely help energy move up. And so I wouldn't necessarily compare this to some of the other times energy's moved up and then kind of seeing a bear market. So I think 2022 is a great example. Yeah, seeing crude oil rise, but also seeing a lot of domestic equity weakness. So really it was kind of the only game in town. And when you look at kind of the other sectors behind it in those instances, basic materials, another kind of commodity driven sector, was the kind of the top spot there in 07 and 2022. Those were easily the 2 worst instances. If you look at another environment like 2025 or 2005, you saw crude oil rise up, but not necessarily a ton of other domestic equity weakness. And that worked out a little bit better. But broadly speaking, when you see other sectors, especially risk on sectors, up paired with energy, it's typically a pretty good sign, especially when you have a sector like technology at kind of an equal level of strength, where if you look at XLK, during the times in which that broader sector moved to 225 signals or more, 1 year out has averaged about a 20% return, with a 6-month return of about 11%. So with technology also kind of being in the driver's seat, especially with energy and technology being followed by some of those other risk on sectors, I'd say broadly speaking, sector leadership indicating a more risk on posture of the market, especially with that lead from technology and its kind of continued uptick here with its pretty extreme gain over the last 2 months here.
Yeah, I mean, one thing I would say in looking at this, I mean, it's great stuff to look at the historical averages. It just haven't been that many times.
Yeah, it really is a pretty unique environment. I think that should be one of the biggest takeaways. Wouldn't necessarily blindly look at just some of those averages, more so just an indication of kind of maybe other scenarios. I think energy especially, I think you need a pretty unique case for something to push that sector up. It's usually kind of a combination of either just crude oil rising or that paired with equity weakness prior. And I think, again, not necessarily trying to compare it to those 07 or 2022 environments. I think it's a little bit closer, more 2005, or just kind of being its own environment of its own.
Yeah, that makes sense. I mean, I think it's also a really interesting environment having technology and energy specifically paired there.
Definitely lends a little bit to some of the AI themes we've been.
Well, it
hearing
does,
from
and
last
every
year,
theme
too.
is different. I mean, you could say like some of the industrial stuff, or I mean, AI is like, what sector does AI not touch these days?
Just about everything.
It's kind of wild to look at it. We'll dive into maybe more of that in a minute. But the energy technology pairing, I mean, we've seen certainly energy back off. We've seen it probably reverse down into more columns of O's on a lot of the relative strength charts that are driving those dolly rankings from a near term perspective. But it shot up so high, right in that 1 month
Instantaneously, yeah.
run. that we saw in March, where you're going to need to see some work back and forth to kind of have those signals undo. So for those that are following along, for those like, how in the world was energy still top of your rankings? Well, that's why. The move was so impressive, right, in March, that it needs work to undo.
Yeah, that's your magnitude of outperformance, and
That
strength was really kind of moving quite a lot, especially as other things moved down at that same time.
Right, exactly. Yeah. And so technology, on the other hand, fell off in strength and has now rebounded. That's more normal what we see. I mean, technology with a lot of those software names got hammered. Semiconductors fell off a little bit, but hung around, and then
For the most part.
they shot notably higher over the past several weeks, and that's been the big providing a lot of tailwinds for the tech space. We looked at another piece in the report, and looking at that over the course of the past few days, looking at semis just taking tech into a stranglehold. I mean, it is like the only game in town in the tech space, or at least seemingly, at least that's what it seems like for now, right? Joseph put a good piece in the report. I'll go ahead and throw this up here as well, that looks at the allocation to semiconductors within the broader information technology sector over time. So I believe this goes back to 2016, if I'm looking at that accurately. So you can see the different kind of subsectors within the space here, kind of where allocation would sit. And when you're looking towards semiconductors, you can see that the allocation within there is just skyrocketed up to, what is that, 34, almost 35% of is the allocation. No, that's of the information technology. Semiconductor, 16%, sorry.
Yeah,
So 35% within information technology, which is at highs. Almost 17% of that allocation is exclusively semiconductors.
Yeah, and that was at the end of April, and then since then, semiconductors have only continued to move higher. So could see that push closer to 20%. And just for perspective, I think semiconductors alone would rank ahead of every single other sector besides technology in terms of the weighting of the S&P 500, which just a pretty remarkable tidbit for one subsector of a broader sector to have that much impact on markets. I mean, thankfully, it's been a pretty good thing this year with the group just having an absolute tear and demonstrating a lot of relative strength. But in the event that things do take a downtick, does have kind of an outsized weight these days. But generally speaking, at least pretty interesting move for things to have that much weighting, both in technology and in the broader market.
Yeah, absolutely. I think the difference, the thing I was going to mention here, is looking at semiconductors up at 17. You have software that has declined for around 10. So what is that? 7.5. And then you have information hardware, or technology hardware, storage, that area has just really been steady, stagnant since 2023. Hasn't really changed a ton. I mean, the improvement in semiconductors, we've seen semiconductors being on a massive run, right? We've seen software has been a big laggard, but some of those software names are starting to bounce back a little bit. I think it's some really focused areas. We were talking about this, I believe, a couple weeks ago, like looking even just toward like IGV, right? I mean, the fund is fine. It's 3.08 fund score. It's a pretty impressive looking point and figure chart.
Yeah,
You
on
got
an absolute basis.
Yeah, you got 3 consecutive buy signals there, moving back to a positive trend. It saw obviously substantial deterioration, but you didn't get that much lower than the prior lows that you saw in 2024 and 2025. And then you've seen really steady improvement, not heavily overbought. I would say it's a much better looking picture certainly than it was in April.
Oh yeah,
right?
absolutely.
But even when you look at something like comparing this to semiconductors, right? SMH, and not to, by no means am I trying to step in the way of a freight train and tell you to hop on the horse next door, right? I mean, but this has just exploded higher. You're at 130% overbought. I feel like I keep seeing more overbought readings for this, which is wild because the overbought readings are supposed to adjust, and this thing just keeps ripping up, right? And it has adjusted, but 5.93 near perfect fund score for SMH. The difference between those is very stark, but that doesn't mean that software is doing terribly. It's just not doing as well.
Yeah, relative to the broader tech sector, it's just been a laggard, especially when you have semiconductors just rocketing higher.
Right. And that's, I mean, that's the name of the game that we're looking at. Right? We're looking at relative strength. That's why if you look at like a momentum approach in technology, stuff like that is done very well, right? A lot of the models we have have been able to focus overweight positions on
Some of those select areas of strength.
a lot of those areas, right? Like I was looking at the holdings for the NDX model. I will bring it up or show them here, but it's a lot of what you would expect in there. Let's say not a ton of Mag 7, but a lot of semis within that space. So I think a lot of that will be pretty interesting to continue to monitor within the tech space as we move forward.
Yeah, I do think it's encouraging just to see a little bit more broad-based upside from the broader tech sector where semiconductor is no longer the only game in town. I mean, we just showed IGV software stocks improving a decent amount there. And if you look at some of those other subgroups, like even cybersecurity stocks, if you look at SIBR, that cyber ETF, has kind of rocketed higher. I think over the last 2 months is up almost 40%. Pretty remarkable comeback after a pretty consistent decline there, returned back to a positive trend.
Yeah, I was at a conference last week in Nashville, which will be another conference there this fall. We're having Catapult there, doing a little plug, our kind of flagship annual conference. That is going to be the end of September. So more information can be found on the research hub there. But I was in there last week and we had a speaker from Nasdaq, Mark Merricks, who did a wonderful job at a panel up on stage, talking about kind of the new age of investing in innovation, right? And a lot of it was focused around AI. And one area in particular that he was referencing was cybersecurity. And I think that that's extremely pertinent given, I mean, the whole reason a lot of these software stocks blew up was because, oh my God, AI is going to come in. Like, we don't even need software anymore. We're going to focus on using these AI models. They're going to take over everything we can do. There's a lot of stuff that, okay, well, maybe that was a little bit of an overreaction, right? But the other thing to keep in mind is that with some of these models, like I believe it was the Mythos model that Anthropic released or didn't release, kind of ironically, is that they were looking at looking toward maybe too many security risks within a lot of these issues, right? And so then when you look towards something like cybersecurity, okay, yes, Mythos can find and fix some of those risks, but a lot of these long-standing stocks are probably going to take on some of that capability and be able to implement that quicker than maybe another service provider is able to be onboarded to provide that service to someone else, right? So if you think about kind of and I'm not doing a great job, Mark, we'd have to have Mark on here to talk about it in general, but just thinking about the actual implementation, the actual workflow, it's pretty likely these big cybersecurity firms got here for a reason, right? And they're probably going to be able to implement some of these things. Some of them have already talked about being able to do so to be able to fight the risks that these models are uncovering, right?
Plus, with that Mythos model, that did cause a little bit of sell-off in cyber initially. You're seeing Claude kind of give some early access to these cybersecurity companies to beef up their system. So at the end of the day, it might actually be a boon if they're able to use and leverage this technology. And I think that's been part of the drivers of what has at least pushed this rally for the kind of subgroup a little bit higher.
Yeah.
Definitely helping the broader technology space as a lot of those names kind of push higher.
Yeah, absolutely. I mean, in looking at different areas of the market, right? I mean, there's a lot of reasons to be fearful for AI in general. I mean, we just had the Pope came out yesterday, I think it was, right? And, was bashing AI, which again, not diving down that rabbit hole. But there's definitely a lot of reasons to be fearful. Like we've all seen the movies, we've all seen the things that we don't want to have happen, especially when you get into a little AI robot conversation and all that fun jazz. But when you think about it from a perspective of, okay, what are different things that we can do to take advantage of areas that might be able to benefit from AI exposure? Not to say, hey, don't worry, don't be fearful, but that's the whole point of cybersecurity, right? And so, hey, we're seeing relative strength, we're seeing cybersecurity pick up the pace a little bit. To your point, even though software is gaining some steam, maybe not every area is, but there are some areas that are showing some improvement there, which will be interesting to look toward moving forward, we'll say. When we're looking at other areas of the research that we put out there over the course of the past week, one of the other pieces that we put out there is our technical earnings review. We typically wait until NVIDIA reports because we want to get the majority of big stocks, and NVIDIA just wants to wait around, also feel special, right, and be the only game in town or big name reporting. I will say it wasn't as, and they feel like they've talked about this. It wasn't as much movement after the NVIDIA earnings
Mhm.
as we've seen in
Pretty
the past.
muted. Mhm.
They still blew out earnings. The earnings were still wildly impressive. Maybe they just weren't as impressive to the surprise wasn't there,
Mhm.
right? But there still was a surprise to the upside. So it's funny how this stuff works.
Yeah, I was actually taking a look at some of the FactSet reports that they put out. Think their latest update. I mean, pretty incredible growth in earnings, and I think that's been a lot of the what's driving the market higher recently. Not necessarily just multiples; it's just pure earnings. I mean, for the Magnificent Seven, when you look at kind of Q1 of 2026 relative to Q1 of 2025, Mag Seven I think has grown their earnings by a whopping like 63%, which is just a pretty remarkable number. I mean, some of that is definitely NVIDIA, but I think it's also notable it's not necessarily just the Mag 7 driving things higher, where if you look at the other kind of 493, excluding the Magnificent 7, number is still around 17.4%. So pretty strong earnings growth, even excluding some of those mega cap names. And
Mm-hmm.
for context, that 17.4% for kind of the other 493 would be kind of the highest since I think 2021. So pretty notable increase in those different earnings metrics.
Nice. Yeah. And when we look at how some of those different earnings metrics kind of carry over into maybe some of the stuff that we look toward,
Hmm.
right, on a daily basis from a technical perspective. We do this piece, technical earnings review, that looks at upgrades and downgrades. So just kind of focusing on technical upgrades and downgrades, which we classify as an upgrade in technical attribute
Hmm.
or a downgrade in technical attribute, right, as a percent of sector constituents. So this is looking at, I believe, technical upgrades or downgrades post earnings,
Hmm.
right, is what this is looking at. And we can see it when we look at it from a sector perspective. Well, maybe let's take a step back and look at S&P 500 stocks heading into earnings, kind of segmented by attribute rating. So the blue is going to, for those following along on YouTube or taking a look, blue is high technical attributes, the gray is low technical attributes. For those that are not following along, they're pretty close.
Hmm.
We see a slight edge on more top or more bottom line beats from high technical attributes, 87 versus 85%.
Hmm.
Not much of a difference though. Most stocks, I mean, three quarters to 4/5 of the stocks beat on both. In looking at that, depending, so earnings are pretty good. That's kind of what that chart shows from my initial perspective, right? It's kind of
Hmm.
what you're talking about there.
Yeah. I mean, nice to see some of those higher attributes beating at a higher clip. And that's been a pretty consistent trend since we've been looking at this. So always nice to see a little bit of confirmation that those higher attribute stocks, historically, there's some higher earnings to back up their better performance.
Right. I think that the next graph shows a little bit more of a picture underneath the hood of that,
Hmm.
though. When we're looking at technical upgrades or downgrades based upon their sector constituents, you see some pretty wide gaps, notably energy. Energy had, probably because everything's done so well, that we've only seen stuff continue to improve and not decline. But the energy saw some notable technical upgrades, 5%. The upgrades versus zero downside. When you look at information technology, that was very notable to me because it was flat. There's no difference,
Hmm.
right? Upgrades and
Just
downgrades.
as
I think
many upgraded also saw that downgrade.
probably due to the high expectations within the space.
Hmm.
Financials saw a pretty big gap as well, a 5% gap there between more positive to the technical upgrades versus the downgrades. We started to see some financial stocks kind of show some preliminary signs of light, I
Hmm.
guess, as it were, which is interesting when we're seeing yields kind of going in the opposite direction. Typically, it should be the other way around, right?
Yeah, it can kind of depend. I mean, they can benefit from higher rates on occasion if you can get some higher profits, but definitely in terms of balance sheets can be a little bit of a headwind.
Right.
But yeah, I think it's also interesting, especially for real estate, a pretty interest rate sensitive sector that
Mhm.
saw about 10% of upgrades. Meanwhile, none of the constituents in the sector saw a technical downgrade. Um, so one of the biggest improvers as a sector I think on the flip side, utilities, also one of the most rate sensitive sectors, did see much more decreases in attribute or technical downgrades. Some of that might be due to some of the pullback and some of those nuclear names we've mentioned in the report over the last kind of month or so. But I think also just higher rates not necessarily a good thing for the utility space.
Yeah.
But yeah, overall, I think another pretty interesting one, especially with kind of the AI build out theme being pretty prevalent this year, has been the number of downgrades from industrials, especially relative to the upgrades. I mean, broader sector still has been pretty strong and holding up relatively well, but definitely seen a little bit of a near term decrease recently within Dolly in terms of those signals. And if you look at just the amount being downgraded here. So definitely something to keep an eye on. Not necessarily too concerned over the broader sector just yet, but definitely interesting to watch going forward.
Yeah, absolutely. I mean, there's always a lot of areas to monitor. I mean, we see industrial still in the top 3 in our Dolly
Hmm.
rankings, right, overtaken by technology. But there's been a lot of stuff to continue to monitor over the
Hmm.
course of the past couple weeks, and we'll continue to monitor over the course of the next several weeks to come. I mean, we could keep running through here, running through charts. I know there's been some participation updates. They hit on participation updates last week. We've hit on a lot of stuff in the report. If you have questions about anything that you're looking at here, I do want to call out the research hub on the platform. It's free. You
Hmm.
can come in and take a look at it.
No downside.
Yeah, exactly. Come in, take a look at it, and some see some updates that we're putting out there. Right, that's the most timely way to kind of get at some of the information we're talking about is through the research hub. DorseyWright.Nasdaq.com. All you got to do is enter in your email. You can get a username and password. And there's certainly additional stuff that you can pay for. But if you want to start getting some of these updates, it's a great way to do it. The second, they'll mention 2 other things. We got a couple events coming up.
Hmm.
So we are, for those in Chicago, we are coming to Chicago on, I believe, June 9th,
Hmm.
if I'm remembering
Yeah, I
correctly.
think that Tuesday.
Yeah, that Tuesday. You're going to be there, right?
Yeah, me and Joseph Cizola, one of the other analysts here.
Yeah, for our shakeout
Mhm.
event is what it's called. So it's going to be focusing a lot of stuff on, hey, how we go about building some of the strategies that we have on the platform, what areas are in focus, and then talking about some areas on our model builder tool. So it's all research platform focused. Great way, half day to come in and take a look. More information there. You can definitely reach out to us with any questions. And then I mentioned Catapult at the beginning. Want to throw a shout out for there as well. That date's going to be September 29th through October 1st. So
Mhm.
those Tuesday, Wednesday, Thursday. This is our flagship event. It is in Nashville. It's a great hotel. I went and stopped by the hotel there last week when I was there. First time I'd seen it because I didn't
Mhm.
go last year to Catapult. But for those that have questions about that, we are going to be ending early bird pricing in about a month. So you got about a month to lock in that lower rate, and then prices are going to go up. If you have any questions about either event, just shoot us an email,
Yeah, absolutely.
ndwsupport@nasdaq.com, or go to the site, and the upcoming events are
Mhm.
right there on the right-hand side after you log in. So anything else, Trevor?
No, I think that's about it for today.
Cool. Awesome. Well, thanks, Trevor, for
Yeah, of
hopping on
course.
here.
Always
Thanks,
my pleasure.
Miles and Tuz, for letting us steal your
Well,
spotlight.
going forward, yeah.
And thanks everyone for tuning in this week. We'll be back to touch base on other action next week.